up, everybody? Welcome back to the channel. So here we go. We're doing this again. I'm going to be doing my daily market reviews regardless of the fact if I take a trade or not. Now, spoiler, strategy didn't come up, but I did take a trade. Okay? I'll get into why I took the trade. I didn't take it on one of the 300K accounts. I took it on my TOPSTEP, my last one that I was trying to pass, and I officially passed, guys. So now I am fully max allocated with TOPSTEP. I have 3 150K accounts, and now it's time to make some money, right? Even though I had the two PA accounts that I have with them, I was already trading them. So for you guys that are new, thank you for clicking the channel. I created this channel for completely selfish reasons, right? Completely selfish reasons last year in July, and it helped me tremendously. And I sat there and basically journaled live with you guys my journey on passing the FTMO challenge, right? And here we are again after a little hiatus and me screwing things up, right? And we're starting all over, and we're still sticking to the same strategy for the most part, right? I do take some, what do you guys call them? Like discretional trades like today. And I'll get into why I took the actual trade. Now, as far as the strategy in itself, it's super simple. You're going to take price from 12 o'clock in the morning, 12 a.m. This is all New York Eastern time. Jesus Christ. New York Eastern time. Sorry, guys. It's been a while since I did this YouTube stuff, so I'm trying to get the swing of it. And the funny thing is, I don't know how to edit videos, so I redo videos like 6, 7, 22 times. So, anyways, you're going to take price from midnight, right? From midnight Eastern time to 8:30 in the morning, and you're going to just mark out the high and low of that range, right? So you're going to let price do whatever it does during that time. It's going to go up, it's going to go down. And a spoiler is that price can only go up or it can go down, right? So at least you're 50%, guess on where it's going to go. So you're going to sit there and mark out the high, and you're going to mark out the low, and all you're going to do is wait for a market structure shift, right? So in a perfect world, you would want to see something like this. Let's say it takes out the high, and for there to be a market structure shift, right? Where a higher high is formed, takes out the other higher high, and then it creates a would that be a lower low, right? And at this point in time, you're going to take out your fib. You're going to top to bottom if you're selling, bottom to top if you're buying, and you're going to go in on the 61.8. You're going to hope for the retracement. Typically, there'll be a fair value gap, even though in my back test, I didn't test for fair value gaps. This is probably something that I should add to my sheet now thinking about it, because I do know that the setup is a little more high probability when there is a fair value gap, and for price to come down and hit TP, something wrong along those lines, right? Perfect world. Unfortunately, trading's not perfect, and neither is the world. So let's get into today's amazing price action because of FOMC, right? So looking at a higher time frame view of what's been going on in the market, right? So obviously we're completely bearish on the 4-hour, right? Like just dumping. We had somewhat of a pullback, but still overall we're bearish. Call it liquidity and then push down. At this point, I'm looking as a higher time frame. I'm looking for this to be my draw on liquidity, right? This low here. That would be my target. So going into today's trades, what I really wanted to look for was bearish price action at the highs. So jumping into the 5-minute of today. Actually, you know what? Let's jump into so I could explain this a little better. So you got equal highs up here. So I was kind of confident that we were going to come and take these out. And then, so what I wanted to see is for us to come, take these out, and dump, right? So that's what I wanted to see. Playing price forward, right? We had an initial push, 8:30, right? Let's see, where is it? Right there. What time is that? 9:25. Let's just play out 9:30. All right. So 9:30 the market. So as you can see, we didn't take out these highs. But I saw all these wick rejections, right? We're coming in wick rejecting. We're just rejecting. Obviously, there's a little bit of consolidation here. I was looking at it. I really wanted to sell, and I didn't want to lose out on this trade. I went to the 15-minute time frame, and I saw that at this point in time, where's my? God damn it! Here you go, my rectangle. So we have a fair value gap up here that we tapped into barely, but then we displaced down, right? So we displaced downward. On a 5-minute, we did break market structure. So at this point in time, I pulled out my fib and I set a pending order, right? I set a pending order. Short. I was willing to take the risk on this trade. Just the fact that all these rejections, there was a fair value gap that we rejected off of, and yeah, that was pretty much the whole analysis at the time that I was taking the trade. So I put a pending order short. I covered the highs, and I targeted 2 times risk. That's it. That's all I did. Extremely simple. We get tagged into the trade, a little bit of drawdown, and then full TP. So that was the trade today. It did not meet the requirements 100%. Why? Because we did not take the high from 12 o'clock. Doesn't always happen, but we did take liquidity. So here, liquidity, right? Here, if I can mark it out again, liquidity again, right? And actually, I believe that this is this equal highs? Almost equal highs. So I was still confident in the play because I was targeting a higher time frame. What's it called? The liquidity point, right? So I was targeting like my drawn liquidity. So I was confident that price would at least push down enough for me to make my 2% on a 5-minute move, right? So going over the rest of the day, because I did take another trade on the 5-minute chart on one of the 300K accounts, but it's not the strategy that I back tested. In my last video, I had mentioned that I was going to more than likely take a position right off of like a market structure break on the minute. So going into the strategy, we wanted to see this high broken, right, or this low broken, right there. Playing price forward. You see that right there. Right there, we break the low, right? So at this point in time, I moved down to the minute chart, and then I was looking for a market structure shift. So it would be the break of this high. Right there. So taking my long position. It was a fairly big stop. And to be completely honest, I'm thinking maybe when it's such a large stop, I'll more than likely try to get in on a, wow, I'll try to get in on a pullback. Messed up my stuff. Right? So, let me see, targeting 2 times risk. But this is the trade that I took on one of the 300K accounts. I risked $1,000 going for $2,000. Playing price forward. Let's see. Let me just jump to the 5-minute. Make it easier. So you can see we did get into some drawdown. I could have targeted the 61.8 of this leg and gotten a better risk to reward, but that's not what I said I was going to do. So overall, full TP. This is FOMC. It's fucking disgusting, disgusting move, right? Like it's just insane. And yeah, so I'm officially up 2% on one of the 300K accounts. The other one, no trade, and that's pretty much it. Playing price forward from FOMC. Eventually, we start getting a pullback as well. So we already broke the highs here. So technically, if you wanted to, you drop down to the minute, and then you will look for another market structure shift, right, to the downside, which we do not get until here. Is that it? Let's see. No, not there. There. That would be your market structure shift, right? It took out. No, it wouldn't be that one either. This is the low, high, and then let's play one more candle out. There you go. That would be your official market structure shift. That it took out the low that created the high that took the liquidity out, right? So, in a sense, you could have taken a short here. You see, short, covering, let's say, the high, and targeting 2 times risk. It's a little far away. Let's see. And full TP. Right. So it would have worked for today at least for FOMC. I did not take that trade. Yeah, and that's pretty much it. Let's see. Jumping out of here. I'm gonna probably add a sheet to the bottom of my Excel sheets for this strategy, and I'll start marking it up and see how profitable it is. I have no idea the win rate, right, at all. So I'm just gonna stick to a 1 to 2 risk to reward and take the trade. And honestly, it's just because I'm bored, right? Like, nah, shouldn't say it like that. I enjoy trading. I want to be able to have, let's say, a few different pockets or I guess trade setups that I can take on individual accounts, so I'm not putting all my eggs in one basket, right? So right now, obviously, you guys saw. I'll just pull it up again. The original strategy that I started last year and the win rate that I have. Today is a no trade day. So I'm very confident with this strategy. So I want to try to get something else under my belt besides just my discretional trades. Something that is more rules based and that you could stick to, and I can gauge as far as how much percentage or win rates I would make off the account, if that makes any sense, right? Like I want to be able to come to the market, take a look at the day, mark up my charts, execute my trade because I have a rules based, extremely strict strategy and have it based on, let's say, one of my top steps and half of or a third of my Apex accounts, right? And I want to do the same thing for maybe this trade setup, right? So I do another top step account and then another 1/3 of my Apex setups. And then I'll have my discretional trades again for one of my top steps and then a third of my Apex setups. This way, at least I'm not risking the same, right? I'm diversifying my risk across my accounts versus different setups. If that makes any sense. At least in my head, it makes sense. I don't know. You guys tell me. Anyways, I hope you guys. Damn, I am horrible today, guys. It's like a tongue twister. I hope you guys have an amazing night. I hope all your wishes come true. And yeah, I'll be back here tomorrow. Hopefully, tomorrow we actually get a setup for the actual 5 minute OTE entry, right? And we go from there because I really am completely completely confident that this year again I'm going to have an amazing year with that setup, and if everything goes well, I won't have any red days. Not saying that it can't happen, but I'm hoping that it doesn't, right? So far the win rate for January and February wasn't the best, but March picked up and April definitely picked up. Looking at last year's numbers, let's see. April. May was so-so. May was a 58%, right? And we had 26 trades. May. May 1st last year. Let's take a look. May 1st. April, May. May 1st was a loss. May 1st was a loss and was red folder news. Then Tuesday. What's today? Today's Wednesday. Wednesday was also red folder news and it was a loss. So Wednesday, and then I took, so Wednesday was FOMC again because there was 3 trades I had marked up. Jesus. I had 3 trades marked up that day. Price must have freaking seesawed. So previously, before I came up with the rule that I was only going to take 1 trade, win or lose, I would mark up every entry that would pop up. So last year Wednesday, there was 3 entries. And Thursday, which is tomorrow, there's an entry and it was a win. So hopefully, maybe, who knows? Who knows? But it's a different day. It's a different market. Things change. Price action is honestly not the same that it was last year. Maybe it's because it's election year. Who knows? But there are significantly different volume and movement between last year's charts and this year's charts. But overall, the strategy still works. Anyways, my dog's barking. I gotta go. You guys have a great night. Sorry for carrying on so long. And yeah, I'll be here tomorrow and I'll see you.